Well, thanks so much for joining us for this edition of Making Sense, where we talk about our finances, our financial institutions, the current trends, and what's on the horizon as well. We're joined by Justin Will from Forest Area Federal Credit Union. Justin, thanks so much for joining us. We are going to talk about something today that's on an awful lot of people's minds for one reason or another, and that's paying for a home and what we all need to know. So, Justin, right out of the bat here, we've heard about how hard it is to buy a home, but after we talk through this, are we going to feel a little bit more hopeful perhaps about the situation when it comes to buying a home?
Well, I certainly hope so, Mark.
Okay.
I mean, there's been, you talk to just about anybody.
Everybody.
Everyone has an opinion. Everybody's heard a story or been involved in one or more stories of their own, right? That they're pretty willing to share in this economy. So there's a lot of different experiences floating around out there.
But we're going to try to, in the next 15, 20 minutes or so, navigate through some of the truth and some of the fiction and maybe some of the things that potential home buyers should consider doing in order to get to there. So let's start off painting with a real broad stroke here. What are the current trends that we're seeing in home prices?
Well, I was looking at the charts, and the home prices have been increasing across the nation since, at least 2011. But isn't everything increasing in price? I mean, that seems to be kind of a common agreement among most of us as I'm talking to people. The price of everything seems to go up every year. It's just what we should expect. But home prices, they've been trending upward pretty steadily ever since 2011. But then we hit 2020. And between 2020 and 2023, they took some of their steepest jumps in terms of overall home prices, and then started to level out a little bit as we entered into 2024. Now, prices continue to still be trending upward, just at a slower pace through 2024. So that's kind of just some interesting information. And what we can also look at is, of course, there's data all over the place, but what does Michigan look like? What does Northern Michigan look like? The United States as a whole? And it's probably no surprise that, in the big broad picture, U.S. large cities are where we're seeing the highest home prices. Those big, super big metropolitan areas, whether you're New York, Manhattan, LA, Chicago, these places, you're going to see the highest prices there. Now, when you look at Michigan as a state, our overall home prices are significantly less than those large U.S. cities. So still makes Michigan a great place to consider living, working, and buying a home. Yeah,
indeed. All right. So how, when we're talking about looking at some of the trends and everything, how does new construction loans, how do those compare with existing home sales? Are we seeing people build because they may be able to do it cheaper or on their time frame, or they can find something? It seems like. How are we seeing the new construction loans compared to existing home sales?
Yeah, and this is one that I almost feel like no matter how I answer that question, there's going to be maybe a large group of people on either side that agrees or disagrees with me. And the way that this is measured, most generally as an industry, is by tracking new construction permits, the permits that are issued, by the counties, the municipalities for new constructions. And new construction really spiked up in about 2021. I mean, we know that's when the market had been super hot and prices on existing homes were, trending at the highest we've seen. So of course, people are starting to look at, if they weren't already interested in building a home of their own, a new home, they're looking at, maybe I didn't really want to build one, but I'm going to because I can't find what I'm looking for. The inventory of existing homes is low, or the prices on those that I am interested in are high. So I'm going to look at construction. So we did see a spike in those new construction permits in 2021. And then it started to taper out in early 2023. Again, one of those things, I won't take any offense for anybody that disagrees with my statements here, but inflation has been up. That's another. We talk about home prices, we talk about inflation, cost of all of the goods that we consume. Well, inflation was on the rise, has been at a level, And I mean, that makes those raw materials to build that new home. It has an impact on those prices also. So I think inflation is probably one of those reasons that we started to see a decline in new permits issued in early 2023. And because people have to consider, at what price am I willing to do this and get into a new construction project?
Well, and there's an awful lot of people that are thinking, wow, I could sell my house for a lot more than I paid for it. But then you still have to live somewhere. Yes, your house is worth a whole lot more, but what you're going to buy probably costs a whole lot more with inflation. And then you add in all the people that are renting, and rent has gone up a lot too. So you may have some people that are trying to transition out of a rental situation because their rent has gotten high to try to get into a home buying situation. So if you are in that situation, for example, and you're a renter and you're trying to get that mortgage, how does one even begin to apply for a mortgage right now? If it's something that you haven't done, but you're thinking now is the time I want to get into a house, how do you begin to apply for a mortgage?
Well, I've got a lot of information to share on that topic, but I'll jump back to originally when you started. You asked, is there hope? What's the silver lining in this case? And when you start the process, I'm just going to recommend people take a moment and think about where you're at in your stage of life. What have your experiences have been? For example, myself, I've been in my home for over 20 years. So if I haven't had a home buying or building experience in 20 years, what I paid for my home over 20 years ago, and now I just decide one day I'm gonna go look for a second home, or I'm maybe gonna sell mine and replace it with another, I'm gonna have sticker shock, and we just have to take a few minutes to inventory that and to think about where we're at in life. Now, I mean, my story doesn't apply to a young person that's maybe in their early 20s that's looking to buy a first home, of course. But I'll also just make that connection to if I bought a newer used vehicle 25 years ago, and now I'm out shopping again today, I say just like that home, man, I am going to be in for a little bit of a surprise if I haven't been watching or hearing about what's going on in the economy. Although I don't know that many of us have escaped that over the last 20 years.
If you bought groceries in the last 20 years, you've seen that same thing that's happened at the grocery stores happened for the real estate listings. That's certainly true. But potentially, this is a curveball, but potentially some good news with potentially a rate decline, and we're seeing inflation come down, but the Fed may announce a rate cut. Could that help potential home buyers?
Absolutely, and it's going to help. It's going to help all of us in a number of ways. Well beyond home buying, if that happens, and of course, that seems to be what everybody's talking about. Prior months we've been talking about the possibility of it happening, and boy, it feels and sounds like it's a little more of a certainty here. But so that's going to be some nice relief also, because the higher interest rates, it cuts into how much home can we afford when we're looking at buying a place. And so when it's time and you're saying, okay, I think I'm going to start this process, take a little inventory, just know what's going on in the market out there. And then really it's never too early to get started. If you're thinking, I want to buy a home next month, well, better get started. If you're thinking I might want to buy a home in the next year or two, it's not going to hurt to get started. And I'm going to encourage folks, start talking to people. If you have a bank or credit union or a lender that you have a relationship with, you're comfortable with them, and you've been pleased with their service, it's a great place to start. I'm also going to recommend you talk to your friends and family or trusted advisors that hopefully you've gotten good advice from in the past. But if you don't know where to turn, ask friends and family and trusted advisors that you trust, and ask them for their experiences. Ask them, how did it go for you? Do you have a name of a mortgage lender or a company that you can recommend? Because naturally, I'm, as a home buyer, going to be looking for a good experience also. Sure. So get that input. As financial institutions, your banks and credit unions, of course, we want to talk to you about it. But don't be afraid if you have people that in your life that you can have good conversations with. Ask them for their input, because I tell you what, this type of business also is a heavy referral business. People want to do business with others that they know others have had good experiences with. So take that. I mean, Google reviews is another great, maybe not specifically for this. You can certainly use it for looking for a mortgage lender. But I mean, how many times am I scrolling through my phone for restaurants near me, and I'm looking at the star rating,
Right. Yeah.
Data. It's out there.
It's powerful. So for somebody that may be considering applying for a mortgage, first of all, you have to start with that, be braced for sticker shock. And also, I have this desire to get a mortgage, or maybe get a home. Maybe not so excited about getting a mortgage, but getting the home, right? So what information as an applicant should I have in hand or readily available when I go and talk to a financial institution? What information do I need?
Well, you don't necessarily have to have paper in hand for that initial consultation. Make contact, get a phone call out, ask for an appointment, apply online with your basic information to get that process started. And in a purchase transaction or a construction, situation, a pre-approval can be a really solid tool. With inventory levels of homes being what they have been, so many sellers were requiring pre-approval letters and authorizations from potential buyers, even to look at a property. And some of that has relaxed a little. Other real estate listing agents haven't relaxed that, because they found value in making that requirement. So that's why when I say it's never too early to get started, if you need that pre-approval, you might as well get started with that pre-approval. Have that in hand. That knowledge is power. Knowing what you're capable of borrowing is going to tell you what you can go look at out in the market. So get with your lender and be prepared to do that. But when it comes to actually submitting an application to get the process started, it's not a ton of information just to get that ball rolling. In fact, 6 or 7 pieces of basic information is all that it takes to get a formal application started, that mortgage lenders then need to work on and get back to you with some basic information and or approval, denial, or request for more information within a certain period of time. And this largely is information as consumers we already know. We need to have the borrower's name, stated income amount. We need to have their social security number. Be careful with that out there. If you're doing online applications, make sure you're using reputable sources. Don't put sensitive information out there without knowing that it's secure. They're not subject for pre-approvals, but if you're actually you have a property identified, we need that property address. We need the estimated value of the property you're looking to buy, and then how much you want to borrow to acquire the property. If you have those 6 pieces of information, that's enough to make an application go live and be connected with that lender, where now they have to engage with you and work through that process. Now, of course, down the road, it always comes, we need to verify that income. We need to verify the property and take a closer look at it, and in those things, maybe get an appraisal. But to actually get the application started, you don't need to have that paper in hand, but you just need the basic information and ballpark figures to get the process started.
And again, if you're dealing with a financial institution, your credit union that you trust, you can go in there and they will help you with all of that. They will help guide you on, you're going to need this and this and this. This is not one of those things where we have to go in. The credit union is there to help you with this process. They're your friend, not your opponent in this, correct?
Yes.
So they'll help with all that. All right. So what are some of the common roadblocks that buyers or borrowers are seeing right now?
From my perspective on the lender side, I think the biggest roadblock is timing. Having the expectation set up front. Here's what I want to do and when I need to get it done by. And if you have a lender that isn't timely in responses, or as the purchaser, if you're not timely in getting some of that verification information in, it can cause delays. So making sure you're working with a lender, and if they're not providing regular, timely communication, reach out to them, tell them you'd like more communication, because if there's a week lapse in verifying something, that's just another week on top of the process. So staying in good communication is on both sides of the equation is really where I think it makes the difference. Occasionally, we can see some backups in timing when it comes to appraisals or title work, but we haven't seen any real problems with that recently because of a backup, because of there's just so much work in the pipeline that these vendors, as we call them, can't get to the work fast enough. The appraisal companies, title companies, and other outside firms, there was a busy time and maybe they slowed down a little bit, but that seems to be like we're past that part. But there are things that can pop up, getting an appraisal and it highlights something on the property that's maybe a concern to the lender. That can slow it down. These are more uncommon. Or we look at the title work, that chain of ownership and how the property's been documented over time. Maybe there's a missing link in that chain of title. That doesn't happen often. And usually if a property's up for sale, selling agents and the sellers have already identified those roadblocks and worked on taking care of them. So little less concerning, but they do pop up occasionally, especially if it's a casual sale or a for sale by owner where they didn't do some of that pre-work. You can see those things pop up, but most, even though we've been in a high mortgage volume period that slowed down with the interest rates now, I'm seeing most mortgage lenders work through things pretty efficiently.
So communicate, get your pre-approval, because things are moving quickly do as much as you can to put yourself in as good of a spot as possible for success. Yes. Get your pre-approval, communicate with your lender, talk through everything, and then go pick out your dream home. All right. So what is what's an escrow, and is it required?
Yeah. So escrow generally is a choice. Escrow is a way for the lender to collect, along with your monthly mortgage payment, additional funds to pay for future costs, typically property taxes and homeowners insurance. Homeowners association dues and some other things could also be wrapped in there. It's a real nice feature if you want to make one payment, know those things are going to be covered in the future as insurance and property taxes come up, and you don't want to have to worry about paying for them yourself once or twice a year. It's a real nice feature. In most cases, no, it's not required. And in many cases, you can turn it on and turn it off. It's not something you want to turn on and off frequently. But if you get into it and you say, I wish I would have done that escrow thing, reach out to your lender after the fact. It can be added. In many cases, can be added later.
I have one. I love it because you don't worry about, is it property tax month or anything like that, because you're going to have to pay it one way or the other. That's right. So it's kind of like nibbling. It's budgeting for people that don't really like to budget or aren't very good at it. All right. So that's escrow. PMI. Can you explain PMI, and does that cost the borrower anymore? Is that an additional cost?
Sure. And so PMI is private mortgage insurance, and it's most often used to assist a buyer in needing less money down to buy that home. Many just not in a special program type mortgage loans, they might require 20% down payment, right? Not everybody has that. There are certainly lending programs out there that require little or no money down, or lenders can offer this private mortgage insurance that comes at an additional cost, so they can lend more, require less money down upfront on the purchase price. And there's usually a premium. And so it goes right in as part of your monthly payment. So you make your monthly payment plus the insurance for borrowing more against the home with a lesser down payment. Great tool for some borrowers. Many use it as long as they're aware of what it is and what it does. It works really well. There's some pretty good safeguards around it in terms of regulation and what we as lenders have to do, because at a certain point, once you get that mortgage down to a certain point in terms of a loan to value ratio, we have to release that and let it go and stop collecting that extra premium payment for providing that service, that higher loan to value or lower down payment situation. So a nice tool, if you're working with a lender and they say, hey, you have to have X percent down, don't be afraid to ask, well, is there a program out there that I might be eligible for that doesn't require so much down? Or is private mortgage insurance something we should talk about? Most good lenders are going to give you those options up front, of course. But if you end up with one where communication maybe just isn't flowing right there at the right time, don't be afraid to ask.
And again, that's a fee. We'll call it a fee.
Yeah.
But that's something you pay that can't, it sounds like legally has to go away when you've reached a certain threshold where maybe the PMI is no longer required. So instead of keep trying to save away to get to a point where you wouldn't need it, you can pay a little bit every month. And then eventually when you get to reach that threshold, it will go away. Is that accurate?
Yes. And it's been a great tool. Mentioned earlier, how much home can you afford right now with interest high? You can, if you have to put less money down, maybe you can get into a little more home. Yeah. Another tool to accomplish that goal.
All right, a lot of information there. So Justin, how long does this whole process take? Generally, how long does this, I walk in or I call the first time to sit down and talk about what kinds of information I need to when do I get the cash? How long does that mortgage process typically take?
Well, so there's a lot of answers to this question because there's so many variables.
Sure.
I'm going to come out of the gate and say we're shooting for 30 to 45 days. Okay. There are definitely lenders out there that are saying we're closing in 30 days or less, and they have the data to prove it. And you know what? Things are going right, and they are doing them in 30 days and less in many cases. I mean, we have a number of them that have worked out and closed in under 30 days. But having open, honest communication with our borrowers, I'll generally always say, we're in that 30 to 45 day range. And if you hit more than one or two roadblocks, it has the potential to go out to 60 days, but usually we can identify those roadblocks pretty early on. So we're pretty comfortable in our shop saying 30 to 45 days is where we're at there.
So if you are contemplating a purchase, go in, talk to your financial institution, talk to your trusted friends, get your ducks in a row as much as you can so that process goes as smoothly as possible when it is actually time to pull the trigger and move forward, right?
That's right. Start the conversation, start it early, and it'll go well.
Justin, I want to thank you so much for your time. We all feel a little more hopeful about getting that mortgage. So I appreciate that time. And we'll catch you again here in the coming weeks.
You got it, Mark. Thanks, Northern Michigan. We'll talk to you soon.
Thank you, Justin. Take care.